Hello, folks. Dan Bird here on Sunday, May the 5th. Happy Cinco de Mayo. I'm flying solo today because Mr. Zuber is taking some well-deserved time off up in Vancouver or somewhere up there in the Northwest. So uh, he may be back, I think maybe Tuesday. So I'm just going to do one today. I'm going to do a single video, and it's going to be a mailbag, something I haven't done before. So we'll see how it works out. But a lot of people have asked questions, and I encourage you to ask questions, which I will try to answer either on a video or directly. And in this case, I'm going to do it as part of this video. So stay tuned for that. First, let me go ahead and share my screen. And we can jump into it. For those that are interested, you can get my newsletter by going to breakpointtrading.net and just click on this button right here for the current week's newsletter. I'll take a look at that in a second. Investors Business Daily actually changed their status to uptrend under pressure, which has gone up. So it's 40 to 60% exposure. It was 0 to 20%. I touched on some of this Friday when I did an end of week video. I am also doing a Zoom meeting for my subscribers this afternoon, but this particular call is happening right now. It's 1:24 on Sunday, but it won't get posted until later tonight. So it's going to be after the Zoom call has already occurred. But for those that have subscribed, you are welcome to join that Zoom call. I also will record it. The recordings are found here under webinars and newsletters. So all the previous Zoom calls, I usually spend a little bit of time on a particular topic, and then I open it up for anything anybody wants to talk about. So it's pretty much an open conversation. So let's take a look at what the market did before I get into the mailbag and look at the S&P. I talked about this Friday. Looks like the S&P is right at the resistance level and looks to me like it's going to break through. So that means that the next level we have to get through is this one up here at about 52.50. And if we can make it through that, then we are at all-time highs, which means the uptrend has resumed and we are no longer in danger of an extended downtrend. At least we had a small downtrend of about 5%, a little more than 5%. And that's pretty healthy for the market to do that. That's actually a good thing that it did that. We'll see what happens next week. Next week, there's very little in the way of news next week. Here's the NASDAQ. NASDAQ already did break out. It ended with a spinning top doji, which means that's this little candle right there. You might be able to see it better on this one. Yeah, that's that little spinning top. And that actually, it means indecision. So the market went up, the market went down, and it ended at exactly the same place that it started. So it's not quite sure what it wants to do for the NASDAQ. But again, all the momentum indicators look like they're starting to trend higher. So we'll see. That could mean it'll come back down, which it might. It might come back to the 50-day again. But we'll see on Monday. Next week, there's very little, like I said, very little in the way of news. If I go to my newsletter, one thing that I put in there every week, by the way, May the 4th be with you. I sent the newsletter yesterday, which was May the 4th. So that was one of the cartoons I had on there. So next week, very little in the way of economic news and not too much in the way of earnings either. So it's kind of a quiet week, which actually might be good for the market, might give the market a chance to move higher next week. The jobs number on Friday was one of the reasons the market took off. Jobs came in a little weaker and the unemployment rate actually ticked up to 3.9. So this is our recession watch that I have on my website. If anybody is interested where that is, it's under charts. And in the upper right, I move the recession watch stuff right up to the top. So right here is the unemployment rate chart. And these are the three things to watch, and none of them have occurred yet that indicate we may have a recession coming, but they're starting to move that direction. So we have to keep an eye on it. Also, I'll talk about this in a few minutes. This, though, is really interesting. This is something that I keep track of on the website as well. And I update this every day. It's basically the trend of a number of different categories. So indexes, sectors, industry groups, metals, currencies, commodities, everything together. And this overall piece right here, the blue chart, tracks the whole thing. So you can see it's at 54%. So it basically is a pulls in all of the information and graphs it like that. So we've been kind of been going sideways and then fell off a cliff here in April. But look at what it's done just Friday. And remember, this is a daily chart. So every one of these dots is one day. Friday, huge move up on Friday. Down here is the short term versus medium term versus long term, which are these columns over here. And you can see short term was also had fallen off a cliff. It's now moved above the medium term. So that normally the way these things work is short term goes first, medium term goes next, and then long term finally. Takes a long time for the long term to move. So it's starting to move higher right now. That's all good news if it continues. And we'll see what happens next week. You can kind of see the trend with the colors over here. We went from greens to yellows to reds, solid reds. You can see the long term takes a long time to move. So it pretty much stayed in the green. But then we went to the reds right there. And in fact, if I go back to the website on the market bias matrix, that's where this is. That's where all of these things can be found. And these are all the components that makes it up. I'm going to show you real quick, starting with the S&P. The way this works is, make this larger. So just focus on this little area here. So when this pink line, that's the 5-day moving average, goes above the blue line, that's a 21-day. That's the short-term trend. When the blue, the 21, goes above the red, the 50-day, that's the medium-term trend. When the red goes above or below the 200-day, which is way down here, that's why the long-term has stayed positive for so long. That's the long-term trend down there. So right now you can see that the pink line, you can see it pretty well in this little one over here on the right. Pink line is not yet above the 21, the blue line, but it's only a day away, maybe a day, maybe two at the most. So very, very close for the short term to start to turn bullish. And that's basically what I do each day. I look at each one of these and I'll just step through all of them and just focus on this down here. Focus on that pink line and the blue line and see how close those things are to each other. Here's the NASDAQ. It's already crossed over. Here's the Dow Jones. Not quite, but one more day. There's the NASDAQ 100. There's the S&P. So all of these are very close to crossing over. That one's already crossed. That's small caps. This is medium. This is the New York Stock Exchange. Almost there. There's Russell 2000. Already crossed. Here's the growth stocks. Getting ready to probably on Monday, that's going to cross over. So you can see all of these are just ready to cross. That this one's a little further away. That's transportation. Here's utility. It's been up there for a while. Again, there's technology. These are the sectors. So those are technology sector, maybe 2 days away. There's communication services, maybe 2 days away. Consumer discretionary is already crossed. There's staples, already been up there for a while. Utilities for a while. There's healthcare, maybe 2 or 3 days away. Energy is actually going the other way, trending the other direction. Materials is maybe a couple of days away. There's the industrials, maybe 1 day away from crossing. There's financials, also actually financials, 1 day away for financials, and then real estate, probably 2 or 3 days away for real estate. So if we look at all of those back on this matrix right here, you can see in this short-term column, a number of those have already turned bullish. Now, keep in mind that when there's an outline around it, that means that particular day. So that's Friday. That changed on Friday. All of those were red. But now, just what I just showed you, I showed you all the way down to the sectors down here. All of those are 1 or 2 days away from turning green. So sometime if the market continues to go higher, sometime by the middle of next week, this whole column right here is going to be solid green. And that's going to push this overall chart up significantly as well. So all of that implies that the market looks like it's going to start to trend higher. That's very good news. All right. So anyway, let's go back to the website real quick. One thing I added is the national debt clock. And I put right here what the debt per citizen, debt per taxpayer is. 103,000 per citizen, 267,000 roughly per taxpayer. That's what we owe for the national debt. And if you want to actually see it changing, and there's no subscription needed for this. This is on the homepage, so anybody can get to this. Just click on the national debt clock, and you'll actually see it changing right there. So right here in national debt, going up, I can't even count how fast that's going, but it's, it's up to 600,000 right now, 700, 800, 900 coming soon. And we'll cross over 1 million right there. So just in about the 30 seconds that we were just talking, we probably went up $500,000 on the national debt. So that's now on the website. Anyone can get this. So it's right there. All right, let's jump over to what I wanted to talk about today, which is the mailbag. And what I've done is over the last couple of sessions, I did one Friday and I did one on Wednesday. And there were a number of people that asked questions on those. And I encourage that. Anybody that wants to ask a question on the YouTube channel, please do. I will try to answer it directly right on the channel, or do something like this. I'll pull them all together and we'll do a mailbag session. So that's what this is about today. So here's the first, and I did these in reverse order. So these are the ones that came in on Friday, and then I'll look at the ones on Wednesday. So first off, let's take a look at the first one. Could the Qs getting above their 50-day moving average be a fake out, getting shorts to go long, only to rip it back in the other direction next week? Seems like most companies have had good earnings, but the market looking for anything that isn't stellar. So first of all, the market isn't trying to fake out shorts or longs. Shorts and longs fake themselves out. So it's not the market doing that. Keep that in mind. It's the shorts themselves that get faked out. The market is just does what the market does. The market doesn't really have a personality per se. The market's going to do whatever the market does. We can't anticipate it. We can't predict it. We don't know what it's going to do. So the market can't fake out the shorts. The shorts fake themselves out. But would the shorts go short because it's gone above the 50-day moving average, and they don't trust that it's going to stay there? Well, that is a valid point. So let's take a look again. Actually, I've got the was that the NAS? That was the Qs, they said. So let's take a look at this. Let's take a look at this chart right here. We'll look at the Qs. And we'll look at a pretty simple chart. This is actually Tom Bowley's he views charts. So I talked about the spinning top. So that spinning top could certainly mean indecision. And does that mean that shorts are going to come in now because they don't believe that it's going to stay above the 50-day? Well, I think shorts would come in if it right here is where shorts would come in when it gets above and then reverses. Shorts aren't going to jump in just because it's over the 50. Shorts will jump in when it goes back below the 50. So they certainly could have gone in right here. And in fact, what probably is going to happen now is if the market does move higher. So just talking about shorts again. So the shorts probably jumped in here when it went above the 50-day and then reversed. And they probably are still in it. So I don't think this is going to fake them out and entice them to get in. I think they are already in. The question now is, are they going to stay in? If we look at a long-term view, that really shows you where the 50-day is. This is a 2-year chart. So again, in this case, it's right at the 50-day. If we look at one with more of the momentum indicators on it, let's take a look at all the momentum indicators, because that's what tells me if it's going to continue higher or not. So in the case over here, where it went up and just about got to the 50-day and then reversed, it actually reversed at the 21 and went below it. In this case, it went above the 21 and went right to the 50. The momentum indicators are all just now crossing over. And let me just show you what I mean by that. So this is the MACD, basically. Here is the force indicator, which takes into account momentum and trend. This here is the long-term MACD that's crossed over. And this is the CCI, which takes into account volume as well. And that has crossed over. So all of these, when this crosses 100, that's bullish. When this black line crosses above the green, that's bullish. When this one here crosses above the 0 line, that's bullish. When this MACD crosses, when that line crosses, that's bullish. And the 5-day has not quite crossed. I showed you this before, but one more day higher, and that's going to cross as well. All of this is bullish. So what is going to happen with the shorts? I believe that what will happen is the shorts are waiting, especially the ones that got in back over here. The shorts are waiting to see if it really is going to continue higher or going to reverse. And if it does continue higher on Monday, all of these shorts that have now been proven wrong are going to have to get out of their positions. And that means they have to buy in order to do that. So if we have trend followers and technical analysts that are seeing that this is above the 50 and that all the momentum indicators are bullish, start getting in for that reason. This starts to move higher and all the shorts realize that they're wrong and they have to get out. That's going to push it higher. That, I think, is what will push it back up to this next resistance level up here. And then we'll see what happens. And that might be an opportunity that the shorts might get back in again. If it can't get back, if it can't make it through that resistance, then the shorts might jump back in. So hopefully that answered that question. Let's check out the next one. And I put the people that asked over here. So if anyone's looking for your question, you'll see it. I sense Dan loves Bitcoin more and more. Well, let's take a look at something. It's not that I love Bitcoin or hate Bitcoin. I'm ambivalent to Bitcoin. I don't trade Bitcoin, but it is a trading vehicle. So I don't believe that Bitcoin will become a currency standard at some point. I do believe the government will come up with a digital currency, which will send Bitcoin to zero. But I don't think Bitcoin will be a currency standard, but it is a trading vehicle. No question about that. So what does that mean? I mean, that's one of the reasons that I put on my website the Bitcoin chart right here. So if we look at the Bitcoin chart, it's kind of been moving in this really solid channel right here. Here's the halving event that occurred. I'll show you another chart about halving. So that's where Bitcoin halved, went up initially, but then came back down. And I mentioned way back here, Bitcoin moved up maybe in anticipation of that halving event, which is normal. All the way from back in January, Bitcoin was just steadily rising. And then it kind of trended sideways, actually slightly down. And then the halving event occurred on April 19th, went up a little bit, came back down again, but came down lower. So it's actually creating some lower lows and lower highs, which is the definition of a downtrend. And you can see that it's in that channel. But it bounced last week and started moving back up a little bit. The momentum indicators, again, you can see those here. Those are starting to move higher as well. So that might imply that Bitcoin is going to move a little bit higher, but will it get through this upper trend line, right around 70,000? We'll see when it gets there. If we look at this on a simpler chart, there's what Bitcoin looks like on a 9-month period. You can see the downtrend a little more clearly there. But the momentum indicators are starting to move higher. Now let's talk about that halving event for Bitcoin, because that I think was very interesting. And I put this in the newsletter this weekend for anybody that wants to read it and spend some time on that chart. But I will actually show you the chart that I created. And this goes all the way back to the beginning of Bitcoin. So again, this is answering the question, am I in love with Bitcoin? Am I becoming more enamored with Bitcoin? I love watching Bitcoin. I love the trading aspect of it. So this whole halving event is fascinating. I did a class yesterday here in my community with a bunch of people and taught them about what Bitcoin is and how it was created and why there is a halving event and why it happens about every 4 years. So Bitcoin, the halving occurs whenever there's 210,000 blocks that have been created. So people don't create Bitcoin. What they do is they create a block in the blockchain. And when they create that block, they are rewarded with Bitcoin. So way back here in the very beginning, it started in January of 2009, whenever somebody created the very first block of Bitcoin, they were awarded or rewarded with 50 Bitcoin. And at the time, Bitcoin was worth about 10 cents. But they got 50 Bitcoin for creating that block. And then as time moved on, you can see in 2011, it was $1. In June, 4 months later, it was all the way up to $28, almost $29. So that's a huge run right there. And then it went all the way back to $3, only 5 months later. And then the first halving event happened when the first 210,000 blocks were created. It halved. So the reward for Bitcoin went from 50 Bitcoin to 25 Bitcoin. So Bitcoin is created as a reward for creating blocks in the blockchain. In order to create those blocks, there's a whole complicated technical component to it of having to create the algorithm using digital computers. You create the algorithm and match the algorithm, and that's how you create a block. And when you create a block, you get rewarded with Bitcoin. So after the first halving, now the reward goes down to 25 Bitcoin. So people were creating blocks, again, rewarded with 25 Bitcoin for every block they created. And Bitcoin went to 1550. Now, this chart is a log chart. You can see how all the numbers are scrunched together over here. So it looks like this one is higher than this $28 one, but in reality, it's just because it's a log chart. All right, so just fast forward. In 2016 was the next halving event. 2016, the reward for creating a block went from 50 to 12.5. And what happened after this halving, and this is the important thing, when it halved, it didn't go up right away. It actually went down a little bit and went sideways a little bit and did not actually start to go up. It took a little while, took a couple of months or so. And then it took off and went parabolic. So it went from here all the way from $265 down here in 2015. 2 years later, it was $17,000. So now, after this halving event, you got 12.5 Bitcoin for every block you created. So now you get $17,000 times 12.5 for every block you create. And then Bitcoin trended down and went from 17,000 to 3,500, went up to 13, went down to 8. And then the next halving event occurred again. And this time your reward for creating a block is 6.25 Bitcoin. Now, as this moves forward, it becomes harder and harder and harder to create a block. And that's the whole point of halving. You need to have more compute power in order to calculate that algorithm. You need more energy to do that. It just becomes a lot more expensive to create the next block. So that's why there are fewer and fewer miners. And now you start to see companies like Mara, companies that are mining Bitcoin, there will be fewer miners out there and fewer Bitcoin created as a result. All right, so in 2020, it was 8,000, then it went up to 63,000, and now here's where we are. Right now, 63,750. As you can see, every time a halving event occurs, Bitcoin doesn't do much, kind of goes sideways to down, and then it takes off. So the last one was April 19th, 3.125 Bitcoin. That was the reward that you get for creating a block. And blocks are harder and harder to create. There's a limit. Bitcoin issuance is capped at 21,000 Bitcoin. Right now it's at 19,690,000. You might say, wow, that's really close. It's almost there. But look at this. The final halving is expected to be in the year 2140. More than 100 years away for Bitcoin to finally get to that 21,000 Bitcoin, 21 million Bitcoin, sorry. So halving slows the pace of production. It requires more and more compute power in order to create more Bitcoin. So it will take a very long time. And that's the reason that this goes up. This is nothing more than supply and demand. This is economics 101. So Bitcoin is going up because there are fewer and fewer Bitcoin being created. And as more and more people buy Bitcoin, it pushes the price up. So that's kind of a primer, very high level, very quick primer on Bitcoin. But going back to the question, am I more in love with Bitcoin? Well, I think Bitcoin is fascinating. I think it's fun to watch. I think it's a great trading vehicle, and you can apply all the technical analysis to it as well. Next question. I'm curious to hear your thought on Disney. With earnings coming up, I'm thinking of asking for a yearly subscription. Oh, that's good. Father's Day. Why wait till Father's Day? Ask for Mother's Day. But let's take a look at Disney. That's a good question. I actually did not look at Disney before this meeting, for this call. So I'm going to take a look at the chart. It has pulled back. Love to see that. Love to see a pullback like that, right to the 50-day moving average. And now starting to move higher. The 21 did not cross over. The momentum indicators look like they are starting to move up. So this is just getting ready to cross the 21. All these momentum indicators are starting to move higher. It is outperforming its peers. All of that is very positive. Earnings are on May the 7th. So that's Tuesday. I believe, based on what I'm seeing here for Disney, I think Disney is going to have good earnings on Tuesday. So this might be an interesting one to get into right now. Actually, now that I'm looking at it, this might be a really interesting one to get into right now before earnings. It's very risky. So, it could just as easily, earnings are binary events. It could scream higher or go back down again. We can look at booking.com. They just had earnings. Look at that. That's what happened to Booking. You can look at AMD. They just had earnings. They missed. So they kind of collapsed as a result. So I would say it's risky, but if you wanted to get in, it looks to me like it's going to do pretty well. There's where support is, right there at about 110, let's call it. So if you were to buy it, that 110 is a little bit, right there, 110 is where support is. Right now it's at 113.66. So if you were to buy it right there, say around 114 on Monday, remember that earnings is on Tuesday. But the nice thing about this, the fact that it's pulled back like this, is that you can put a stop in right there at 110, and if it does come back down, now it could gap below that. Naturally, that's a risk you will also have to take into consideration. But your stop is very close to where your buy is. So what is that? 110 versus 114. That's a stop of about 4%, 3.5%. So that's not bad. That's a pretty low risk trade right there. So I actually like that myself. That's one that I might actually do on Monday as well, or I might do options with it. So that's my thoughts on Disney. Thanks for that question, because that one actually looks really interesting. Disney might actually take off. We look at a 2-year chart. You can see Disney has kind of been doing nothing. And then here in October, when the rest of the market took off, Disney took off as well. It's been pulling back here, but just before earnings. And again, all the indicators look like it's ready to go. That's my opinion. That's not a recommendation. Take into consideration your own risk profile and see what's going to happen. All right. So that was a good question. Thanks for that one. So let's take a look at the next one. Does this mean it's going from cash position to buy? Well, maybe. I would say not yet. And I think what the refer here to is the market timing strategy that's on the website under portfolios. Market timing strategy is tracking the market and using double ETFs. So QLD is the Qs, double the Qs. You can see that just turned bullish on Friday, and the reverse ETFs, the bearish ETFs, just turned bearish on Friday. So the early signal just turned bullish. And as you saw when I showed you how close they were to turning bullish on the short term, that could happen on Monday as well. So yes, it could be Monday. I'm not saying it will be Monday. I'm just saying that it might be on Monday that we move to a cash position. If we look at the QLD right here, this is the short-term, medium-term chart. Again, you can see right here where it's just getting ready to turn. I'd like to see this get above the 50-day, about around 85 before getting back in on the bullish side. But all the momentum indicators are just crossing over as well. So that all looks very positive. Here's the exit, by the way, back here in April, or March rather. So we've been waiting almost 2 months now for another bullish signal. VectorVest gave a confirmed down on this as well. If we look at VectorVest, in fact, real quick, and I put the chart in the newsletter so you can see it there as well. But VectorVest 2 is very close to giving a their medium-term signal is called a DEW. So that gave a down signal right here on April 10th, and it's very close to giving an up signal. That might be Monday as well. So what has to happen is the price needs to be, take this closer to a 3-month, price needs to be above this 30-day moving average line right here, which it is. But the DPO, detrended price oscillator, needs to also move above zero. So both of these have to be true in order to get a buy signal. And if we get one more up day, Monday or Tuesday, then this one, the first medium-term signal, is going to turn bullish. It will turn buy. Now, how do we get the longer-term confirmed up signal? That happened right here, the down signal. So that's, April. For that to get an up signal, we need to have a couple of things happen. Let me change my layout real quick. Let me see. Not that one. Not that one. This one. Okay, so to get the longer term signal, we need to have 5 consecutive days. So this day has to be higher than 5 days ago. So we have Monday, so this will be the first day. So 1, 2, 3, 4, 5. So if this goes up on Monday, it will be higher than 5 days. It also needs to be higher than 10 days. So 1, 2, 3, 4, 5, that's over here. So if this moves higher, it will satisfy both conditions. It will be higher for 5 days and higher for 10 days. So condition 1 is confirmed. Condition 2 is for the buy-sell ratio to get above 1. And that has a little further to go. So these will have to be pretty significant up days in order to get this above the buy-sell ratio. So even though we may get a due signal on Monday, I think we're probably going to take till Wednesday or Thursday, but it could be next week as well if the market moves higher next week. So again, all of these things indicating that the market may be ready to move higher. All right, next question. Looks like the S&P is retesting 50-day and will probably fail from there and continue to the downside. I've already kind of answered that. I'm talking about the Qs up above. It's the same answer. I think that it looks like it won't fail. The Qs is already above the 50-day, but the S&P is right at it. But I think, again, because of the momentum, I think it's going to get through as well. All right, next question. Considering doing something like the put spread you did on Starbucks to hedge a long position but didn't do it, would love more tips. How do you sell short using a debit put spread. All right, I'm going to talk about this in the Zoom call that I do in a lot more detail today, but I'll very quickly go over it here for those that are interested in this. So options is more of an advanced strategy. Some people play them, some people don't. I know there's a lot of real estate people on this channel, so many might not be in options, but I do have an options page on my website for subscribers. It explains which options are bullish and bearish. It explains time decay, what that means, and how it affects options. It explains options. It explains the two different types of spreads, credit spread and debit spread. And you can just click on that to learn what they are. I actually prefer debit spreads. When I met with John Carter a few weeks ago in Miami, I asked him, what's the ratio between debit spreads and credit spreads that you do? And he said 90% of what he does is debit spreads, 10% is credit spreads. And this little chart right here is something that I created. And if you click on it, it gives you a bigger view. And so this will actually show you what each of those are. So credit spreads are up here in the green section and debit spreads are in the red section. If you are bullish, I'm going to show you one of these. If you are bullish, that's and you're using a debit spread. That is a bull call debit spread. And the way you do it is with two options. You buy a call and sell a call. So you buy the call at the money. At the money just means roughly close to what the current price is. And then you sell another call higher than what the current price is. So it limits your loss. It's a neutral, bullish, or moderately bearish strategy. And the risk calculation is just the cost of the debit spread. That's it. So your break even is the lower strike, wherever your lower one is, plus your net debit. That's your break even point. If we look at the risk calculation for credit spreads are kind of cool. The difference between debit and credit is with a debit spread, you pay money for the spread. So you actually have to pay money out of your account. The nice thing is, since you are levered or you are hedging by using two different options, your account will allow you to have to do these with very little money in the account. So you don't have to have a lot of margin in order to do a spread like this because you're hedging it. You're limiting the upside, but you're also limiting the downside. So limited profit and loss. With a credit spread, the cool thing is that the money is a credit, so it goes right into your account immediately. So when you do this strategy, you get the money right away. And then if you're right, and in the case of the bullish one, if it does go up and you go all the way till expiration, it expires worthless, you just keep it. You just keep the money. So you never bought the stock, you just keep the money. It's pretty cool. But the risk is the distance between the spreads. So if you have, and this is the issue that a lot of people, or the mistake people make, is they look at the prices on the spreads and they say, wow, if I do a spread that's 20 points away, I can make a lot more money. Well, yes, that's true, but your risk calculation is the spread. So 20 times the number of shares. So if you have 100 shares, that's 20 times 100, or $2,000 is your risk calculation. Whereas the risk calculation on a spread down here is only $250. So that's the difference. So I like doing debit spreads. So let me show you, I'll give you an example of one. I actually have one teed up right here. This is E-Trade. I actually like the way E-Trade lays out options. I think it's a little easier to do options on E-Trade. Thinkorswim has a nice platform as well. It's a little more difficult to figure out, but this one is great. So if you remember, I'm doing NVIDIA. So I think the first thing we want to do is we want to look at the chart. So if we look at a chart for NVIDIA, and if you remember what I said about NVIDIA, it normally moves up into earnings. Earnings is May 22nd. It's just gone above the 50-day moving average. All of the momentum indicators are moving higher. So this one looks like it's going to go higher. So let's say I am taking a bullish strategy on this. You can take a strategy either way. It doesn't matter. But in this case, by looking at the chart, I think the strategy is bullish. So calls are on the left, puts are on the right. Calls are the bullish strategy. So if you remember what I said back here, let's see, when I looked at this, nope, I looked at this. So we are doing a debit spread down here. We are doing a bullish debit spread. So we want to buy a call at the money, and we want to sell a call higher than that, or a price that's higher than that. Okay. So buy at the money, sell higher. So at the money is right here, 885. You can see the price right now is 887. So we're going to buy a call at 885, and we are going to sell a call at 890. Now I'm going to remove this and show you how easy it is with E-Trade. So 885 is at the money. I want to buy one right here. And it turns green because that means I'm buying. And I'm going to sell one right here. It turns red because I'm selling. All right, so I'm selling higher. Right down here, it tells you what you're doing. It tells you that it's a debit. If I was doing a credit spread, it would tell me the credit or the amount of money that is going to go into my account. In this case, it shows me the amount of money that I have to spend. Now, there's only one contract or 100 shares. So my debit is $245. That is my whole risk. That is all I am risking. If I am wrong and this thing goes south, then I lose $245. If I want to make more, if I move this up to 10, which is 1,000 shares, then I make 2,400, or I risk $2,400. It's not what I make, but that's what I risk. But I'm just going to do one. And this is a great way really to practice and learn about options. So my risk is $245. So if I preview that, and there's my debit spread, and when I click send, it sends it in. So that order is now queued and ready to go for Monday. And that's a real order. Now, what I've done, and I'm going to talk about this on the Zoom call, and I'm going to share this with subscribers, but what I've done is I've created a debit spread calculator where I can put all the information in. I've already populated this with NVIDIA with what I just showed you. 885, 890 is a short strike. Quantity is 100. I put in what the expiration date is. Now, I didn't talk about the expiration date, but the expiration date actually is right here, June 7th, and it shows you it's 34 days. So I like to do these about 30 days or so out, maybe longer sometimes. But June 4th is 34 days, so it shows me all of those for 34 days out. And then I just take my, calculate my spread. So that's what that means. So the expiration, it automatically calculates the number of days. There's 32 days from right now, from today. It is a bull call, and I can change that. So I can do a bear, I can do a bull. You see the ones I've done before, bull and bear. NVIDIA is a symbol, quantity 100, days left to expiration is 33, current price is 887, and now it calculates what this means is a point of no return. Point of no return basically is my exit. So if this goes down to 870, if the price goes down to 870, then I'm going to exit this trade, or I could exit the trade. Now it just gives me a warning sign. This is my target, my stop and my target. So my gain is 70%. And when I talked to John Carter, I asked him, you know, what do you typically target for a gain on debit spreads? He goes 70%. When I put my debit spread on, and as soon as it executes, I put in an order to sell it at 70% gain. He never holds them all the way to expiration, never. And you should never hold any option till expiration. But his is 70%, and that's what I do as well. So if this executes on Monday at 2:45, I will immediately put in an order to sell it at 4:17. That will be a 70% gain. And I can't put an actual order in to sell it at 123, but that's what I'm going to watch for a 50% loss. So 50% down, 70% up. And then once it actually sells, I'll put that in here. And you can see these are some that I actually have done. So there's 70% gain. There's a couple of that went the other way. These were actually sector ETFs, energy and financials. I was betting bullish, but they started going down, so I got out of them. 46% loss. Up here shows me what my total gain on these trades are, total number of trading days, and then the average percent gain. That doesn't include this one that I just opened. And then these little red boxes tell me whether it was a gain or a loss. So this one I was bearish, and it was I gained money. This was bearish, it was a gain. This was bearish. So this helps me to see over time which strategies have been working or not. So starting up in here, the bullish strategies were giving me losses. Down here was a bullish that gave me a gain, and it was the opposite. So this little calculator is what I use, and it's something that I am going to give to anyone on the Zoom call that I do later today. All right, so that's how to do, that's a very brief, quick primer on how to do debit spreads. Have you thought about adding charts for long junk bonds and short junk bonds? With a recession, I would think short junk bonds would do well. I think that's probably true. So that's short junk bonds. I think that's probably true. But remember, we are not close to a recession yet. If you look on my website, we are still pretty far away from actually hitting a recession, which I showed you before. And it's under the charts in the recession watch. All three of these indicators have not yet hit. And when they hit, the recession is about 3 to 6 months away when they actually trigger. And none of them have triggered. So we are not in a recession. And I don't think we're going to have a recession until probably next year, early next year. So will short junk bonds do well in a recession? Yes, I think that probably does make sense. And I took your advice. Thanks for that question. It was a very interesting one, and I actually created a chart for junk bonds, actually all bonds. So this is the year-to-date performance of all of these bonds. So you can see junk bonds here is the green. So it went up as the market was coming down lately. And this is actually, the green is junk bonds, the blue is short junk bonds, and the pink is high-yield corporate bonds. So high yield corporate and junk bonds are kind of moving together with each other. Short junk bonds should move the opposite direction. Here's corporate bonds down here, and here's the 20-year Treasury bond, TLT. You can see here recently, just the last week or so, they have been moving higher, pretty significantly higher. So that'll be something interesting to watch. But thanks for that question. That was a very interesting one, and something that we can watch right here on this chart. But again, I don't think that, and the chart is right here under index charts. I also made one for indexes. So this is the performance of the indexes ever since the market bottom in October. You can see how Bitcoin is done. There's the Bitcoin halving. Here's the Magnificent Seven making a comeback, and here's all the rest of them. So we're not in a recession yet, but to answer your question, I think that is a great strategy if we ever do enter a recession. So we'll keep an eye on that. Could you touch upon the next video why coffee and cocoa have seen, this is the last question, by the way, cocoa have seen those parabolic runs? Was there a shortage of those or news of it? That's a really good question. I did not know why they had done that. I'll look at that chart here in a second, but I did some research, and here's what I found. Cocoa prices soaring, hitting 12,000, 4 times last year's price. Many think it will go higher, meaning smaller and more expensive chocolate bars, unfortunately, may put out of business small specialist producers. 3 factors: environmental, economic cycle, and human. Environmental factor is the impact of El Nino weather phenomenon, which has caused drier weather in West Africa, contributed to problems on farms such as swollen shoot virus disease. Higher cocoa prices have translated to higher chocolate prices. Higher chocolate prices have already translated into declining sales for chocolate products. Producers and consumers have responded predictably to the crisis. So first, let me look at the agriculture commodities. This chart's on my website as well. And you can see cocoa and coffee. Cocoa first started to take off back here in March, and actually really way back here at the beginning in January, and just went parabolic. Cocoa now, just in the last 2 weeks, has dropped off a cliff. Coffee then started to go higher as well. And this is one of the reasons I shorted Starbucks. And coffee also is dropping off a cliff. So both of those are starting to benefit. You can see DBA, the actual price are on these dots down here. DBA is actually way down here now. I'll actually move that. The DBA actually is way down here, the actual price. These are moving averages, so they're lagging, and it will take some time to catch up. But DBA now is way, way down there. So both coffee and cocoa are starting to roll over, which might help the CPI report. But that gives you a sense for what that looked like. Now, I was thinking, what does that mean for companies like, let's take a look at a company like Hershey. How will it affect Hershey? So here's the chart for Hershey. Hershey has been basically just doing nothing, going sideways, and they don't report. They actually already reported on Friday. In fact, let's take a look at Hershey. See what happened on Friday. Nothing. I don't know what happened with Hershey Friday, but said that they reported. So I don't know what happened with the earnings, and I don't know. It was before the market. No, it wasn't. Well, it looks like they normally report it before the market, so it probably was before the market. So if we go back and look at Hershey again, it looks like Hershey probably reported pretty good earnings. So they might actually start moving higher now. But will that cocoa price affect them in the future? Don't know. They hopefully are hedging their cocoa positions, so it's not going to hurt them. But right now, Hershey is actually above its 200-day moving average and starting to go higher. All right, so that's it for the mailbag. That was the last question. Hope you guys like that. If you did, leave a response. I know this was kind of a long video today, but Zuber's not here, so we didn't do two. So I just did one. So keep the questions coming. I'll do this again in the future if you guys think it was worthwhile. And have a great week. Next week, it's going to be a very slow news week. So we'll see. Thanks, everyone, and have a great weekend. Take care. If you want my newsletter, by the way, just come to breakpointtrading.net and click on this button if you want to subscribe and participate in next month's Zoom call. $99 a year. You get all that content that I just showed you, or $0 if you just want the newsletter. And you won't get asked for a credit card, and we don't share email, so you shouldn't get spam by coming here. All right, that's it. Thanks, everyone. Have a great week.